Welcome to the weekly pivot for September 7th, 2025. All right, so we're going to go through a review of last week, like we normally do. We'll talk about upcoming events, largely the same ones we discussed last week. We'll talk about September rate cut probability and how that's changed over this week, especially after the jobs data that came in on Friday. And then we'll talk about SPX seasonality. We'll just go through what we talked about last couple of weeks now. And then we'll talk about some SPX analysis. All right. So looking back at last week, one of the things I said when we were discussing what might happen, and the first thing I said was I have no idea what will happen this week. So I'm going to give myself a check mark for that. The anticipation, the expectation was to kind of stay within a range. I think we broke a little bit further out of that range. We did largely stay in the 6,400 to 6,500 range, breaking below it, gapping down below it and then recovering it on Tuesday, and then breaking above, gapping above it on Friday, and then recovering it again on the sell-off. So, while we did close in the range and kind of stayed within it for most of the week, we definitely were not in that 100-point range, which I think was like a 170-point range. Still was helpful as a guide, but definitely not correct. We talked about a dip, getting, if we lost the 6,400 level, that we might dip to 6,375 to 6,275. That ended up holding as support, and that was kind of our first dip buy zone, with a deeper retracement going towards the weekly 21. I'm still looking for that. I still think that would be healthy for the market, but the market continues to be resilient. So we'll see how things kind of play out over the next couple weeks. And then, of course, we have this position Golden Gate still in play to 65.50 by the end of the quarter. And we almost reached it on Friday. I think we got to 65.30, which was actually good enough for dip buyers over the last month. So if you were targeting, say SPY 650 calls for 918 or 1017, or SPX 6550s or 6500s on dips for those expirations, you did very well with SPY 650 calls for September going well over 100% off of dips. All right, so we've got some events coming up to keep an eye on. We've got consumer credit this Monday, nothing on Tuesday, PPI on Wednesday, CPI on Thursday, so inflation data, consumer sentiment on Friday, and then we've got the following week on the Wednesday, the 17th, we've got Fed interest rate decision and Fed Chair Powell's press conference. So that's probably the main event for the month, and that's what probably everybody's looking forward to. So expecting, this week, there are some volatility events. We will get more inflation data. At this point, I think that the job market is a little bit shaky, and so it's likely, based on what Fed Chair Powell said in Jackson Hole, that they're going to focus on making sure that they keep up their end of the bargain for both sides of the mandate, and that means there's likely going to be a rate cut. Now, we talked about it last week. Target probabilities were about 90% for a 25 basis point cut. The only thing that's changed since last week is the fact that the additional 10% or so has shifted from keeping rates stable to now 11% 50 basis cut. Now, I think there's going to be a 25 basis point cut. We talked about that last week. I think that the Friday jobs data probably cemented that. And so that's just an easy way for me to say September rate cut is coming. So expect that on the 17th, 25 basis point cut. Let's talk about seasonality. Nothing has really changed. September's, 53% of them have been in green, 47% red since 2006. We have been talking about a potential green September at the end of it. Based on some historical data for the last 20 years, nothing is in cement right now. We could definitely go down from here, and we could even close down from here. So far, seems to be lining up. We've had a relatively sideways week. So a lot of September still to go, but this is worth thinking about as we sort of proceed forward. So, 75% of the time we've had a positive summer, we've also had a positive September. So given that, even if we get a deeper retracement, which is ideal, I'd be looking for dip buys into the end of the year for that. All right, and finally, let's talk a little bit about the structure and kind of where we're at right now. So it's important to note that we have this daily structure of higher lows and higher highs being set up And that still remains with, we got an all-time high break again. The daily structure remains up. We just continue to make higher highs, continue to make higher lows. This last dip, as aggressive as it was another higher low and did close back above the daily 21. And then, of course, we pushed higher into the end of the week. So market's continuing to show strength. And I think that, we do have a divergence that has been setting up, and it's kind of yielded some mean reversions along the way. We had one as well back in May, June. That ended up being, some pullbacks to the 21 and then continuation. So worth keeping in mind that we have a daily divergence. It's not necessarily something I would take a signal off of or try to trade directly, but it's definitely suggesting that there could be an opportunity for some more downside once the structure breaks. So good way to think about divergences if you trade RSI, you trade phase oscillator, whatever oscillator signal that you like to trade, is that you should favor the trend still, and anticipate that you could get a mean reversion, but not necessarily a reversal. And you definitely should be looking at the structure of price before you start to get too excited about downside continuation. So that's where we're at on the daily chart. We had a first weekly test since June. You can see these arrows that I pointed it out. We talked about this last week, coming down to the 813 zone, which was 63.75 to 62.75. We did get that little tap before we came back into this box that we have. This is about 6,400 to 6,480. That's sort of stabilizes some range that we have that we're sitting within. Obviously we've gone below it, we popped above it, but that's worthwhile, keeping in consideration into this week. So 6,400 to 6,480. We talked about 6,400 to 6,500. You can also keep that if you like a 100-point range. But I'm looking for kind of a weekly close outside of this before I'll start to get too excited about things. Now, that being said, we do have some signs of momentum slowing down. And in these cases, we've had a more dramatic move to the downside. We've also had kind of a less dramatic move to the downside before pushing up a little bit higher and then getting a bigger move to the downside. That being said, most of the time, when we start to see some momentum slowing on the weekly here up in this zone, often it does yield some sort of a mean reversion. So optimistically, I am still looking for a bigger dip. But if we don't get it, c'est la vie. That's nothing we can do about it. But optimistically, I'd love to go get, a weekly 21 test. At this point, I think 6,200 even would be a really decent dip for us for a push higher. So, kind of similar to last week. I really don't know exactly what to expect. We are in daily compression again. I released the compression candles this weekend. So if you're using those, you can see it on the candles. If not, you can see it on the phase oscillator down here. But you can see we are in compression again, and it's likely we're going to get some sort of expansion again off of this. So, we'll continue to side with the trend, but opportunistically look for kind of a bigger move for a pullback that we can buy into. Now, one more thing, elephant in the room: the economy. We're starting to see some weakness in the jobs market that we haven't seen in quite a few years. There is a absolute disconnect right now with the market and the what we're seeing on the economic side. I am going to continue to default to trading the chart, but that jobs report was not great, and we saw some signs of this earlier in the summer. So it is important to remember that at some point there will be some influence of that disconnect on the markets if the markets start to get a little bit spooked about potential upside on companies that have been doing really, really well recently. So that's something to think about, and that could certainly influence the direction of things as we sort of proceed into this more choppier September, October timeframe. We'll continue to trade the trend. We'll continue to respect this daily trend as long as it holds up. And as soon as we start to see some structural breaks, we'll have an opportunity to look for a deeper retracement. That's what I'm looking for into this week. And, it's going to be likely that this zone is, going to stay relevant for the week. So I would definitely watch that. And, we'll be able to trade intraday, some nice setups. Last week was a beautiful day trading week, harder for swings. Overnight swings kind of worked if you were on the right side of things. If you were offsides, it was a real pain. But for day trading, it was pretty spectacular trades both directions. Friday's short was, one of the best trades of the year, I think. Be patient. If you're waiting for dips, be patient for them. If you're continuing to hold into this strength, be mindful of the potential for a bigger pullback that we've been talking about and hoping for quite a while, and just manage your positions appropriately. That's your weekly pivot for September 7th, 2025. I will see you in the next one.